Hey everybody, this is Jim at SP500chart.com. It is a little afternoon on the 4th of July, 2013. Happy, what do you say, Happy Independence Day? Merry Independence Day? Happy 4th of July if you're a U.S. citizen. And if you're not, you know, what am I supposed to say? Yeah, you know. So anyway, before we take a look at the chart, it was a short session yesterday, so I'm going to make it kind of commensurate with that, and it's going to be a short video. But I still got to read the whole thing to you, and that is that www.sp500chart.com and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. Let's take a quick look. Okay, basically, we are looking at a 15-minute chart, and we have been looking at and examining this purple line right here that I just highlighted because it looked like this could be a neckline from an inverted head and shoulders. Now, if it is a neckline that is up sloping, so, and it's a little open to interpretation. I think this, if we had to say this was an inverted head and shoulders pattern, then I'm pretty comfortable in saying this is about the best place you can make the neckline. And I'll tell you why. For one, it clearly lines up with the two rally points that define what would be the head, and that alone is enough, but also it lines up with this breakout point. It doesn't quite line up with this high over here on the 21st, but I'm not worried about that. What's concerned me about what's taken place over the past week is the fact that the S&P has been all over, above and below a line that should have served as support once it got over it. So that gives me a little pause as to what's really going on here. Maybe this really isn't an inverted head and shoulders pattern, or maybe it's an inverted head and shoulders pattern that just isn't going to pan out. If it is, it will be, and correct me if I'm wrong, but in the past 4 years, I cannot think of an inverted head and shoulders pattern that we've identified in the S&P that did not fully work its way up and out of the pattern and fully meet its minimum expected target. I just don't think there has been one. Now, let's be fair. This is a tiny pattern. It took just a fraction over 4 days to form. Some of the patterns that I'm referring to in the S&P took months or certainly weeks to fully form. So it's not like this would be a major failure, but I've got a couple things I want to show you that I think are important. To begin with, on our shortened session on the 3rd of July, the S&P ran back up to this line, failed to break it. You can see that right here. So this line is still going to be something I'm going to keep on the chart, and I'm still going to keep it with the idea that if it can break again, then we likely come on up and we will make that minimum target. But until it breaks, obviously, that's not going to happen anytime real soon. Now, we could make this target, but it would be many days down the road. Let me rephrase that. We could make the target of about 1645 and not get above this neckline, but it would be quite some way into the future because of the fact that this even though this purple neckline is rising, it's probably another 7, 8, or 9 days out from rising to the point to where the S&P target from this pattern could be reached and still stay underneath this line. I hope I said that right. Now you may say to yourself, well, then doesn't that make that a failed inverted head and shoulders pattern? Well, yes, sorta. But I'll remind you, there's a stock that a lot of people bought for dirt cheap back in 2009, made a almost perfectly formed inverted head and shoulders pattern. Hey, this is going to be a short video. I'll show you what I'm talking about. We're looking at a 3-day chart of LVS Las Vegas Sands, and it made a very nice inverted head and shoulders pattern with an upsloping neckline, and got over the neckline just for a little bit, stayed under it for over a year, got over it just for a little bit, and has traded sideways for what seems to be, in stock terms, a near eternity. So all of that to say, this obviously, even though LVS is extremely underneath this neckline, once it broke right here, went sideways, came up, made another leg up, and now we're into the sideways thing. This still portended a bullish move in LVS. Now, in all honesty, hard to trade. You got the breakout at about 16 bucks, and you would have had to have been a really patient trader to have stayed in this trade when it got underneath that neckline, but then finally got up to about 60. That just brings to mind what can happen when you get a neckline that is upsloping. It can still be a bullish thing, but you just never can't quite get the steam to get over that neckline and to, quote, make that target. Now, if we measured the target on LVS, you measure it from the point of the breakout, which would have been here, and you can see that, I'm not going to be able to grab my little, there we go, I had to move the chart. If we measure this target, you get a level of close to 120. And obviously it's not there yet, but could it get there? Sure. What's happened with LVS is that it just needed to consolidate, it appears, in this area that took place right before it started to head south. So I think there's just a lot of churn in this area. But hey, this video isn't about Las Vegas Sands. It's about the S&P. But I just wanted to show you that when you have an upsloping neckline, you can still truck on up and make that minimum target, but not with the same look to the pattern as if you had a horizontal neckline. So right now I'm looking at trading tomorrow, see if we get over this neckline. Yeah, I think we may have a little bit of a double whammy of resistance from this little short-term line right here, and if we extend this on back to the high that was in place before the wheels came off at about 1654, that may even be a more precise placement. So I would say getting up over 1620 would be a very good sign that the S&P is ready to come on up and make a run at that 1645. As far as support goes, I'm still thinking we got support down at about 1600. We can add one more line to this chart. Just for jollies. And that would be over the last two bottoms. And maybe that would provide some support here as well. So let's just kind of keep an eye on it. Right now, though, it's looking like it's kind of butting its head up against some resistance. But the look of this still tells me there's a strong likelihood that we do get up over this area here at about 1620 and make a run for the mid-1640s. So there you have it. That's your July 4th, 2013 video. Hey, enjoy some fireworks. If you do them yourself, be safe, be careful. If you don't and you're in the southeast, try to avoid the rain. And thanks for watching.